Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Let's start with a look at the markets today, and so far it's been relatively quiet. We are seeing broad-based gains in Europe. The US equity markets have just opened as well, about open around a half percentage point higher at this stage. European markets around the same at the moment, and like I say, well, we are seeing broad-based gains in the fact that most sectors are higher. Really, the overall moves are actually quite insignificant, I guess, in comparison to what we've seen previously. We're seeing quite range-bound markets in equity indices at the moment, similar to what we're seeing in the commodity space in a lot of examples, particularly in the oil markets. In the FX space, we are seeing the yen weakening again. Now, I think this is really just building on yesterday's moves. We saw a few key technical levels broken, which may hint at further yen weakness in the coming few days to a week or two. And some of the weakness has been attributed to comments from the finance minister overnight, who suggested that if they continue to see the yen strengthen, that they could intervene in the markets. Now, while this is obviously an important statement to make and could be contributing to the yen weakness that we're seeing today, I think it's important to note that we have had these comments on numerous occasions over the past couple of months, and as of yet we've yet seen any actual action off the back of them, despite the fact that the yen has continued to strengthen off the back. So I think we've got to take these comments to an extent with a pinch of salt, know that it is on their radar, but whether that is going to lead to any significant yen weakness, I'm not yet convinced. I do think we are potentially just seeing a bit of a correction in these yen pairs. Elsewhere, we are seeing the dollar again continue to build on these gains. Despite this, we are seeing some commodity strength. Of course, there's this correlation between the dollar and the commodities. The dollar's only up around 0.1% today, so it's not really going to be acting as too much for a weight on on commodities today. But over the past few weeks in particular, when we have seen this dollar strength, it does tend to have weighed on commodities. But like I say, commodities are broadly in the green across the board today. So like I said, it's pretty quiet. We are seeing a lot of range-bound markets. We're seeing we're seeing some volatility, but at the same time, we're not seeing any significant swings anywhere really so far in the markets. Now, like I say, it's been relatively light on the data front, but let's take a look at today's economic calendar and see what we've had in store. Now, the most notable thing that stands out here is the Chinese CPI data that we had out. Now, a couple of things worth pointing out. The CPI reading itself came out at 2.3%. Slightly below market expectations, but at the same time unchanged from last month or the month before, for that matter, which really does suggest that the economy has continued to improve at a decent pace, but we're not seeing the inflationary pressures build quite yet. Maybe the weaker currency is helping to sustain them at these higher levels, but we're still well below the Chinese CPI target of around 3.5%. I think the most notable part here to this data this morning was the PPI reading. This is it fell from it rose from -4.3% to -3.4%. Now, I think there's probably two key factors behind this. One of them is going to be the rebound that we've seen in commodity prices, which is going to start filtering through on the wholesale side in China. The other I think as well is going to be the weaker currency, which again does tend to bring with it inflationary pressures, again offsetting the large drop that we have seen in the producer price index for some time now. So I think it's quite positive data that we're seeing there from China at this stage, potentially going to limit the amount of stimulus that the People's Bank of China can offer, given the fact that inflation is not too far below its target at the moment. But I still do think there is some room, and I do think we probably will see some more interest rate cuts to come before the end of the year. We've had the trade balance data from the UK, which was slightly better than expected, as you can see on this data, but still quite disappointing in that the actual trade deficit did grow in the first quarter of the year, and again this has been attributed to exports falling. We know that we're in a slower trade environment globally, but at the same time, because the UK economy is performing it's performing okay to quite well, we are still seeing imports pick up at a time when we are seeing the pace of exports declining. So that's contributing to the overall the growing trade gap that has been so prevalent for so long now in the UK. Still to come today, we do have the JOLTS job openings figure, which comes in about 30 minutes time. We've also got the API weekly crude oil stocks to come later on this evening. Now I think that's going to be quite important. We know that people have been watching this, and given the volatility which we've had in oil markets, like I say, they have become quite range bound as of late. So if we see a big shift in this API figure, which would suggest that we may see a similar move in the EIA reading tomorrow afternoon, then this could create that little bit of extra volatility, could be the catalyst for the next move in oil markets. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.